Dear subscribers, as you know, we shared many information for you, and we are studying very hard to find current news for you. However, I cannot use this channel for future. Please follow our new channel called as Daily News Report and watch our video to support us. Link in description. Also, you can reach the video we shared on Daily News Report by clicking on the top right button. We highly recommend watching, subscribing and sharing. We will continue to share some news on this channel, but we take precautions against some situations for future. Thank you for supporting us.
Failing monetary system, and that's the root of the problem. We have a Keynesian monetary system with compound interest, and the effect of compounding over time ultimately leads to exponential money growth. We're on an exponential growth curve for money right now. We've been on it for some time, and that requires a hideous amount of money to be created and added to our financial system, or the whole system implodes. Monetary officials knew last year that we were going to need many trillions of additional money added to the system to keep it from imploding. But what they didn't have was an excuse to create the money. Last fall, if monetary officials had stood up and said they were going to create 6 or 8 trillion new money in the first half of this year, 2020, people would have risen up against them and said, over our dead bodies, you're not going to be creating that kind of money. What gives you the right or the reason to have to create such money? And rather than coming clean with the people and telling them that we have a failing monetary system, which would be an act of man, by the way, instead, they launch a virus or drop a virus on humanity, which basically sends our economy into lockdown, which then means people need subsistence checks to be delivered to them because the economy's in lockdown, and becomes the justification to create any amount of money they want to, which is exactly what we're seeing. You see, and then you can say that the whole problem is an act of God. The financial system in ill repair or falling apart is now being labeled by the mainstream as an act of God instead of an act of man and a very pathetic human being called John Maynard Keynes with his Keynesian monetary system. That's what this is really an act of. And to say that God had anything to do with this is absolutely improper, because God doesn't design things this poorly. This is truly an act of man.
Yeah. All fiat money systems, especially when they're not tied to gold and a gold type of standard, are basically transfers of wealth over time as the money becomes less and less valuable. Who does this latest transfer that this money, the money printing they're doing across the world, it's trillions of dollars across the world, who does this benefit and who does it hurt?
Well, it hurts the common man, because ultimately it's debasing the currency unit or the dollar, which maybe people haven't quite felt the effects of yet, because due to the demand destruction, which I'm going to say is more or less probably going to end up being a temporary destruction of demand. We've seen a dramatic fall in the price of crude oil. But I mean, ultimately what we're going to get out of all this is a reduction in living standards, where people and where businesses have been shut down. People have been more or less furloughed or locked in their homes. And if, as and when people come out of their homes, a lot of the jobs that were formerly in our economy, I think, are going to be missing, which means that going forward, people probably will not have the living standards that they were accustomed to prior to the lockdown. And the value of the currency unit due to the amount of spending that's occurred in reaction to the virus. I mean, the reason that they gave for the spending. You see, my whole view is that the spending had to occur with or without a virus. The virus just was a way to explain it to the people that they had to print, and to get the people to agree to allowing the printing without rebelling. So the money was going to be created anyway, and it was created, and it's very, very debasing. Ultimately, I think it leads to the currency unit being debased to the point where at some point we're going to have a hyperinflation, because the currency unit will ultimately achieve its true intrinsic value, which is zero. Every fiat money system ever created by man has ultimately ended in that result, with the currency unit achieving its intrinsic value, which is zero, because it's created out of thin air, and with compounding, which leads to exponential growth, it ultimately, it's a mathematical formula that means that the currency has to go to zero, and it does. And I mean, the work of Chris Martenson explains this very well. For any of the viewers, listeners, if they want to Google Chris Martenson and Crash Course, and if you want to watch the video expose that Chris Martenson created back in 2009 called the Crash Course, it explains the effects of compounding in a fiat money regime extremely concisely and clearly, and it shows you what the effects of compounding are. And to illustrate visually for people what the effects of compounding are, Chris gives an example where if you take literally a drop of water, if you put it in the middle of Yankee Stadium and you double the amount of water every second, how long would it take before Yankee Stadium would be full of water? And the answer to that, I believe in Chris's representation, is it would take 50 minutes for Yankee Stadium to be full. And that's starting with a drop and doubling the amount every second. And as he explains, after 45 minutes, the water in Yankee Stadium would only be up to your ankles. But in the last 5 minutes, because this is the way compounding works, all the action happens at the end. And in the last 5 minutes, the water would go from being up to your ankles in the stadium to overflowing the stadium. So the last 5 minutes of the 50 is where all the action happens. With the fiat money regime we have today, with the US dollar, with compound interest, we're in the last 5 minutes or thereabouts now, where the action's all starting to happen. And the amount of money that's required is growing at an exponential rate. And the reason why we haven't really run into huge problems yet with the money is largely because there's an extra 21 trillion plus that nobody even realizes was created, but was created, documented very well by Catherine Austin Fitts and Dr. Mark Skidmore. This is money that was created by the Federal Reserve and the Treasury over the years 1998 to 2015 and beyond. This money was created because the people at the Federal Reserve, who model everything, knew very well that they would encounter a period in the future where exponential amounts of money would be required or the system would collapse, which is why they started creating off money and housing it in slush funds like the Exchange Stabilization Fund, which has no oversight and is operated at the discretion of the Secretary of the Treasury. And the people in these uber positions of responsibility in the monetary affairs of the country and operating the world's reserve currency, they know very, very well that the amount of money being created, the amount of US dollars being created in the global monetary system has been growing at an exponential rate, and an increasingly larger exponential rate as time has gone along. This is why America has engaged in so much adventurism militarily, because a lot of the money that had to be created, they did not want it impacting the domestic economy, and a lot of it was used making pockmarks in the sand for decades overseas, because this way the money could be created, but the domestic economy was spared the hideous effects of inflation in the domestic economy, and effectively the inflation was exported to the rest of the world. Mm-hmm. But to my thinking, America's running out of countries to invade and destroy, because there's only so many of them in the world, and as a result, they have to find some new creative ways to spend money, which is why they've taken to destroying their own country, which is why they've launched the coronavirus, and why it's impacting America the way it is today, mm-hmm. and why the trillions upon trillions are being promised to rid America of this hideous disease, mm-hmm. which is man-made. So, but it's man-made because it had to be man-made, because they had to have an excuse to create yet more trillions. And the bad part of all this, people, is just wait for the next 3 to 6 months when we have new spending programs promising another 3, 6, 9, or 15 trillion in additional spending, because the amounts required are growing at an exponential rate. So this is a treadmill that we're on now, and we're not going to escape it. And this story won't have a happy ending, unfortunately.
I agree. And this is typical of late ages of nation states. Sir John Glove definitely had some good research on this in the 70s through his time and working with the British armies and leading armies all around the Middle East, and visited a lot of countries, and did research talking about nation states. After about 250 years, they tend to have exorbitant debts, have debased their money, have sprawling militaries, and they start to collapse on themselves. Of course, our Declaration of Independence was about 240 plus years ago, so the United States is getting to about that point. But I also think that this is extending to the world, because I think in addition to the U.S. doing what you've stated, you have other countries participating in this fiat system. So then now that we've kind of taken this system global, what do you expect is going to happen, Rob, next to the bond markets leading up to this hyperinflation you're talking about? What will be the signal that we're about to hit the hyperinflation? Will the bond markets provide us a signal?
Well, I mean, there are tricks to the trade that can be utilized to sort of kick the can down the road, or prolong this agonizing game. The Europeans seem to have caught on to this earlier maybe than us in North America. But all that being said, Europe, the European Central Bank is not in charge of the world's primary world reserve currency. Although the euro has reserve status, it is and has been up till now anyway, for sure, secondary to the dollar. Mm-hmm. And my guess would be that what will signal the imminent end of the world of fiat money will be if the American authorities try to take U.S. interest rates negative in nominal terms, mm-hmm. because that will be the last excuse anyone ever had to seek a safe haven or haven. Let's just say haven in the U.S. dollar. This is mm-hmm. the fact that there were positive rates of return. Now the Europeans, and I know some would argue, well, the Europeans have negative interest rates. You're right, they do have negative interest rates, which has explained why there has been somewhat of a flight into and strength in nominal terms in the dollar. But once dollar interest rates go negative, the good reasons for, or any reason really for holding the dollar versus alternatives, disappears or evaporates, in my view. And that's when things could get really, really interesting, and there could be a global loss of confidence in fiat money completely. So that's what I think we're probably looking at in the relatively near future. And if the American authorities don't take dollar interest rates negative, it'll be a self-fulfilling prophecy that the increase in the amount of money will be so overwhelming that the system is gonna have to implode on itself anyway. Too many dollars are required to keep the system running, basically then can be spent without alarming people that the money's growing at too rapid a pace. So we're in a very tricky position right now. My guess is at the end of the day, we're probably going to see officialdom try to take us into probably a digital currency regime.
Mm-hmm.
I think that the digital currencies will be allowed to appreciate dramatically in the near future, because this will be the preferred alternative universe that the monetary authorities will want us to head towards, rather than sound money historically, which would be gold and silver.
Mm-hmm.
And I believe that as long as there continues to be entities called COMEX and the LBMA, the London Bullion Market Association, I believe that the monetary elites will continue to use those vehicles to suppress the price of, ultimately it's a paper gold, paper silver, but it's the canary in the coal mine that Jane and Joe Sixpack look at when they want to know if there's monetary distress. Most people have been trained that you look to the price of gold, the price of silver, and as long as the people on the news, CNBC and CNN, are reporting that the price of gold and silver are under control, everything's fine. If the price of gold, silver are to take off and break out dramatically, and if we get dramatically escalating prices, it's second nature to people. It's the effect of a smoke alarm going off, in a home, and people know that there's trouble, and so they will do everything in their power to keep those things suppressed, while allowing, in my view, digital monies to probably appreciate at a very rapid level. And ultimately, I believe gold and silver will follow them, but I think they'll lag. So, and I felt that way for a very long time now.
Yeah,
so,
there's been a lot written by the IMF in terms of integrating digital currencies into the banking system. I know here in the US, Hashgraph, which is not a Bitcoin ledger system, but sort of 2.0 version of cryptocurrency, has been used by credit unions. And a lot of the banks have been developing their own digital ledger systems within the banking system. The IMF wrote that if you wanted to get people to adopt cryptocurrency, you would do it through the bank. So you put your money in the deposit, it's turned into a banking crypto. They'll discount it, which is where you get your negative interest rate. So if you put $100 in, they give you 95 e-dollars. They're calling it e-money. It's actually basically a digital ledger system within the banking system. And then, of course, you use that money in a digital nature to go to Amazon or wherever it may be to spend your money. So I do see the upcoming war between cryptocurrencies used in the banking system and gold and silver. My question is, what happens if gold breaks out? We recently spoke to Bill Murphy of GATA, and he thinks that they've started to lose control of the system. Of course, you have LBMA trying to use 400-ounce bars to backstop COMEX in these ACE, these mysterious ACE vehicles. Have they lost control of the gold market? Do you think that gold will be allowed to rise? Do you think we're going to see true price discovery in gold?
The reality, Rob, is that gold prices in reality have risen dramatically. Okay, it's just not visible in the headline. Like when we turn on the TV at night, we're told that gold went up or down a certain amount. But what's underlying all that is if you're an investor, if you're a person at home who has money to invest, and if you want to buy gold ounces, if you want to buy gold coins, if you want to buy a bar of gold, the price that you have to pay to obtain physical ounces of gold has no bearing with the price that we're told that gold is on TV or in the newspaper every day. Really stiff premiums are being paid for ounces, physical ounces already for silver and gold. And what this is doing is it's discrediting these paper substitutes for gold and silver that we are told are the the real price of gold, which it isn't. I mean, for instance, the price of gold and silver on COMEX is, I believe, sub $15 today. That's 15 American. And that translates currently probably into about $21 Canadian. And right now you would have trouble, probably not even 21, maybe 18 or $19 Canadian. But you can't buy a physical ounce of silver in coin form in Canada right now for under $30. And most coin shops that would be selling silver eagles or silver maples, which are the national coins of America and Canada, you'd be probably looking at $32 to buy 1 ounce of those coins anywhere at any of the dealers. So there's very little semblance. The premium being charged to own physical ounces has blown out in the last 2 or 3 months. I mean, recently we had the Royal Canadian Mint shut down for a few weeks because of COVID. I believe the U.S. Mint is currently shut down and not producing coin. And this has led to physical shortages. But we've also seen the shutdown of primary silver mines in Mexico as a result of the COVID disease. And we have seen major refineries in Switzerland shut down due to the disease. And so this has created a supply shock in both the institutional market, because the kind of supply of silver that comes out of Mexico, which is the world's biggest producer of silver, that supply is instrumental in creating, we call it the big bars or the 1,000-ounce bars. That are those are the bars that are traded institutionally and for industry, whether it's the the technology that turns sunshine into electricity. Heavy user of silver. Your electronic cars, the Teslas, they're heavy users of silver. But when they consume silver, they buy big bars. They buy 1,000-ounce silver bars, and they melt them down as they need them. But so the supply on that end has been curtailed because the mines that create that big block of silver in Mexico, that's been offline. And then you've got the mints offline as well, and they create more of the good delivery bars, the really shiny bars that you see that look pretty and the pretty coins. That supply has been curtailed. Meanwhile, we've had mind-numbing and eye-watering money creation, which has really fed demand or heated up demand for investment metals, gold and silver. So we've got demand stoked and we've got supply curtailed on both the retail and and sort of the industrial end, and that's led to very large premiums and premium expansions of metal over physical ounces over what the official price is as set by COMEX and LBMA. And we're coming to a point where COMEX and LBMA pricing is going to be abandoned, at least, or as a viable entity is going to be abandoned. People are going to stop paying attention to it. And I've noticed that in recent weeks, the volume of contracts traded on the COMEX exchange have dropped dramatically in both gold and silver. And I think the reason for that happening is that people are learning, maybe the hard way, that you can't get silver or gold by buying COMEX futures. There's no exchange of futures contracts for physical, and anybody who goes through the process of trying to obtain physical ounces through COMEX, their interests are not settled in physical ounces in New York. Instead, they're shipped off to London in what are called exchange for physicals, which is another fraudulent shunting of the obligation to deliver to an entity that ends up ultimately settling in fiat money. So these entities that were created to supposedly give us price discovery, COMEX and LBMA, they really aren't price discovery mechanisms for physical ounces at all. And as people learn that, I think that the volumes being traded on these exchanges will dry up, and they will wither and go away. So, and the market for real ounces is being set in the real market, where people, exchange money for metal, cash and carry. And I think ultimately gold and silver markets will be forced to a cash and carry model.
Rob, going back to the economy, we started the conversation talking about coronavirus and the impacts it's had on the economy. I live in Texas, and the governor's talking about doing partial reopenings, but with a lot of limitations on how many people and what types of businesses. So I don't think it's really intended to, push button restart the economy and get it going to where it was. What's your view on, will we ever return to the same economic output that we had prior to coronavirus, given the virus fears and the impending deflationary collapse that we're looking at? Do you think that was the end? Do you think we've been through the good times and now we have to go through the correction?
I think we're in for a very, very fierce correction. I don't think it's going to be easy for us to return to where we were economically. I'll speak for what's going on or what's occurring here in Toronto, Canada. Much of our economy has been shut down. People are getting paid, and in a lot of cases, people are getting paid more to sit at home and watch Netflix than they formerly were to be employed and showing up at a job every day. And the longer this goes on, I think the harder it's going to be to wean people off getting a check and staying at home, because there is a segment of society that would be more happy to sit at home and do nothing and get paid more than if they went to work and spent 40 hours a week at work. So breaking people of these bad habits, now that they have been formed, is going to prove to be quite a trick, and I think it's going to create a very, very long-lasting lag on the economy, whether we like it or not. So I think it's going to be extremely difficult to get the economy back up to prior performance. And this is a big, big problem going forward. Yeah. And I suspect you're experiencing, or will be experiencing, much the same issue in many parts of the United States as what I just highlighted here in Canada.
I think we are. I think the latest number is somewhere around 20 million additional unemployed. Of course, I've always argued the unemployment number is much higher than the U3 number that you see in the media. Structural unemployment, of course, that's tracked at Shadow Stats on John Williams' sites for anybody that wants to follow that. So I did see the St. Louis Fed say that they expected, I believe, by early summer for us to have 32% official unemployment, which probably puts us closer to 40 or so, which is higher than the Great Depression. So definitely not good numbers coming out of even the official sources.
Sure.
And I expect they're worse. Yeah.
Rob, but for instance, when you mention the St. Louis Fed, the St. Louis Fed is also the keeper of monetary aggregate data.
Mm-hmm.
And the monetary aggregate data that they produce give us effectively numbers on the Fed's size of the Fed's balance sheet, which is in theory supposed to be somewhat related to money supply, or the monetary base anyway. Mm-hmm. As it's supposed to be expressed by the Fed's balance sheet. But what I'd like to point out to people is there's $21 trillion that were created between 1998 and 2015 mm-hmm. that appeared on the balance sheet of the Department of Defense and Housing and Urban Development, or HUD, mm-hmm. and that money was on their balance sheet and it disappeared. And we have not been given any valid explanation as to where the money went. Okay, but that money is not included in any reconcilable way by the St. Louis Fed in terms of the amount of money that there is in the system. And that money is in the system, or it was in the system. And my view is it still is in the system, and it's hiding. It's been in hiding, because it's been in places like the Exchange Stabilization Fund. And when the St. Louis Fed measures monetary aggregates, they don't get to see the Exchange Stabilization's balance sheet mm-hmm. when they're doing their monetary aggregations. Mm-hmm. And all I can say is, if you add 21 trillion to the Fed's acknowledged balance sheet size, money growth has been vertical. And, you know, isn't it strange that mathematics dictates that fiat money with compound interest leads to vertical money growth? And what we have had is vertical money growth, okay? And we see evidence of it everywhere. This is why America can engage in military adventurism everywhere in the world and never have to worry about whether they have enough money to move the Fifth Fleet from the Mediterranean mm-hmm. you know, to the Persian Gulf, or whether that 11th or 12th nuclear aircraft carrier battle group is really essential. Mm-hmm. I mean, this is something I always found amazing about America. America never has to ask the question of whether they can afford the next war, whether they can afford the next military machine, whether they can afford the next round of nuclear weaponry. Mm-hmm. But I mean, isn't it amazing? These things, by and large, don't really affect the domestic economy, and the effects of the spending of that money is felt more internationally or globally. But isn't it really incredible? Anytime that there's, you know, the proposition of a new social program in America domestically that might require $5 or $10 billion, they got or to build a fence might be $2 or $3 billion. Mm-hmm. You know, they always have to count their pennies and their nickels to see if they can afford it. Mm-hmm. But you know, there's never a discussion of, boy, we're thinking about invading Venezuela next week. Can we afford it? Well, how much is that going to cost? Well, I don't know. You know, maybe that'll be a $2 trillion item. Mm-hmm. There's never even a discussion. It's like it's unbelievable. But I mean, mm-hmm. what I'm trying to point out is we live in a world where money is being spent. Buckets and buckets and buckets of money are being spent. But if you talk to lawmakers in America, they're concerned about eyedroppers full of money. Mm-hmm. When buckets are being thrown over the side every 5 minutes, and to feign that you're concerned about eyedroppers full of money when you're throwing buckets all over the place is absolutely ridiculous. It's ludicrous, and it's the deception that's being played on the public, mm-hmm. and that deception is called fiat money, its growth, and its deleterious effect on humanity. And this is what happens. This is what happens when you run a money system that's divorced of the discipline of the gold standard, And this portrays what's occurred to the value of the dollar since America got off the gold standard in 1971. Its value has gone down, and it's gone down at a dramatic pace, and it's going to continue to go down and lose its purchasing power at a dramatic pace going forward, simply because math dictates the amount of money in the system needs to grow at an exponential rate.
Mm-hmm.
Compounding and exponential growth mean that living standards have to decrease, and the value of money will decrease along with living standards.
Mm.
End of story.
Rob, last question for you for the interview. You discussed a 21 trillion in missing money, which you can go to solari.com and you can look that up. There's an accounting and links to all of that directly to the Department of Defense and HUD. You can also find it announced on Michigan State University's website, because that was done by Dr. Mark Skidmore and his PhD students. Really good, legitimate research done there. With this 21 trillion off-sheet cash, because if you look at what the Fed aggregates are, I looked this up a few months ago. I think we were at 1.6 trillion in official liquid cash in the system, dollars, not counting bankers' balances or electronic money. But you have this 21 trillion off-book money, and because a lot of it's distributed to providers of military equipment or logistical equipment, it means it's sitting on the balance sheets of all these corporates across the world. Has anybody ever looked at all of the US dollar holdings of all the corporates in the world and compared it to the official monetary reserves and said, hey, we've got a lot more money in circulation here? And what happens when when the corporates start having we have this deflating economy and they start throwing this money into the market? Is that how we're going to see that 21 trillion, hit the market, is when they have to bail them? They're spending cash to keep themselves from going insolvent, or how do you think?
Well, Rob, I look at it this way. America is issuing record amounts of bonds. Mm-hmm. With each passing auction, record amounts of debt are being auctioned. America's never had a failed bond auction. Mm-hmm. I've worked in the bond market. I've worked in the U.S. bond market. I've worked in the Canadian bond market. I'm quite familiar with the provincial bond market in Canada, which is another sort of avenue. I guess the equivalent in America would be state finance. But I mean, all I'm saying is I'm very familiar with sovereign debt markets around the world. And America is the only country in the world that issues debt that's never had a failed bond auction. And they're the biggest issuer of debt in the world. And the notion that America would never have had one failed bond auction is sort of like saying Tiger Woods plays 72 holes and never gets a par. Mm-hmm. And, Tiger Woods playing 72 holes is never going to get 72 birdies or 72 eagles. And to say that he doesn't get a par in 72 holes, nobody would believe you. Mm-hmm. Well, I don't believe the notion that America's never legitimately had a failed bond auction, because with the amount of debt that they've issued over the number of years they've been issuing, the notion that they wouldn't have had a failed bond auction or one, is unfathomable to me. That's for openers. And the reality is, you see, because we don't know how much money there really is in the system, this is why there's never been a failed bond auction. You see, there's more money sloshing around in the system than anyone will acknowledge or admit. And when you've got, you see, and it's this dark money that's been created off book, mm-hmm. that's held in reserve in places like the Exchange Stabilization Fund. This money can be marshaled up very quickly anytime. For instance, if the U.S. Treasury is trying to issue debt, if the buyers don't show up at the auction, the Exchange Stabilization Fund can have a flunky shell company in Bermuda or in Grand Cayman Islands or in Caribbean banking centers submit a bid and take down a whole bunch of government bonds. I mean, this is the kind of crap that goes on. It's the wonder it's the wonderful world of shell companies and friends in friendly countries who are willing to provide the shell structures for the U.S. debt complex to create a shell company or a shell entity and suddenly be a participant at a government bond auction. To make the auction look strong, and to make it look like the dollar's strong, and to make it look like the United States could never have a failed bond auction. But all it is smoke and mirrors, and it's a complete and utter lie. It's a complete and utter deception to tell the world that the dollar is that strong, and it's a complete and utter lie to tell the world that the U.S. has never had a failed bond auction, when in many cases it's been the U.S. government itself, the Treasury, or proxies of the U.S. Treasury, buying the bonds themselves, monetizing the debt. I mean, this is what's been going on. They've been doing it with dark money.
Yeah.
And in a world that today, listen, if you can believe that 2 airliners brought down 3 skyscrapers, why is it you can't believe that a government would buy its own debt at auction? I mean, this goes on. Have a coffee, everyone. Smell it before you take a sip. This is what's going on, and it's going on in spades all around us, and it's been going on for a very long time. And you know what? We're now at a point where the money growth is so extreme, it's going to be really difficult to hide it from us, the lumpen, much longer, because it's becoming very visible very quickly. Because you know what? We're standing in Yankee Stadium, and 5 minutes ago the water was up to our ankles, and pretty soon we're going to be drowning. And that's the state of affairs today. Okay, so get with it or get a big snorkel.
Yeah, that's a perfect note to end on. Thank you so much, Rob, for joining. We appreciate it very much. Look forward to speaking to you again.